Food, gas, housing, services, this is all getting way out of hand due to inflation. But not to worry. The Bank of Canada has a very powerful tool up their sleeve to deal with all of this. And it's by punching every citizen in the face and making their lives even harder. Okay, I'm just exaggerating. But not really, actually. See, every homeowner, everyone looking to buy a new car, or anyone looking to get financing of any kind just got a little poorer. When the Bank of Canada raises its rate, everyone feels it. It trickles down the economy and no one is spared. One way or another, things are gonna get more expensive for you. But in this video, I wanna focus specifically on the real estate market, as that's my specialty. Everyone is fearing another 2008 type crash because these rates keep going higher. So let's dive into this. Is the Canadian real estate market finally gonna crash? Will millennials finally have their day? Number one, when rates go higher, people buy less. When most people are buying a home, they don't really care about the price tag they're paying on the home. Obviously, they wanna try and get a deal, they wanna negotiate and try to go through the motions. Everyone wants a deal, sure. But the primary decision factor on whether to buy a house or not really comes down to the monthly payment. That's what people truly care about. How much is this beautiful home gonna cost me every single month? And can I afford it? That's question number one, and pretty much the only question that matters. So with rates around 2% before all of this hiking madness was beginning, to now being closer to 6%, that's a gigantic increase. So with the average home in Canada costing roughly $600,000, with putting 5% down, amortized over 25 years, and with a 2% interest rate, your monthly payment would have been $2,415 a month to carry that house. Fast forward to today, if you're buying the same house, the same $600,000, the same amortization, but the rate is 6%, your monthly payment is now $3,672 a month. A $1,257 difference more every single month for the exact same house. Now, it may not seem that intense, but for the average middle class family, that really adds up quick. For example, the average income in Canada is $50,000, so the average household income is roughly around $100,000. Now, if you were to buy that same house today, like I said, for $600,000 with the 6% rate, that higher mortgage payment, your mortgage cost makes up 44% of your entire pre-tax income. So after tax, depending what your tax rate is, man, you're probably like up to 55-60% of your monthly income going towards just paying your mortgage. Now, that doesn't also include property tax, insurance for the house, insurance for your cars, your car payments, gas, food if you got kids, we know how expensive they are, clothes, groceries, whatever else you need to buy. Like, there's no way you're able to afford that house. And this is just for the average $600,000 house. In my local area where I live and invest, which is Kitchener-Waterloo, you'd be lucky to find a house for $600 grand. Most houses are anywhere between $700,000 to $900,000. So just imagine what your household income would need to be to comfortably carry a $900,000 house. We're talking probably somewhere around the $200,000 a year household income minimum. Number two, prices are falling. Now, because mortgage payments are so much more expensive, people are becoming less interested to buy real estate. And with prices continuing to fall, a lot of people are of the mentality of, I don't want to catch a falling knife. Let me just keep renting. Let me see what's going to happen with the market. Maybe I'll buy in a year from now. We'll see what happens. So in my local area of Kitchener-Waterloo, prices fell anywhere between 15 to 20%. And with that happening over such a short period of time, we're talking about 6 to 8 months, that's pretty insane. People definitely thought Armageddon is here, 2008.2 all over again, and even to some degree, not as intense, but to some degree, even myself. You know, we have a very, very busy and active flipping business where we're buying a lot of properties direct from seller, and we even put a pause on our marketing and our buying just to kind of see where things were going and where things are gonna end up. So even me being a real estate agent and a real estate investing professional, even I got a little bit of cold feet. But then something really interesting started happening, and I literally called all of this on my Instagram. If you're following me on Instagram, you already know this, and if you're not following me, man, Follow me. I don't know where that logo is going to be, but follow me. I literally predicted the shift that was going to happen, so let's get into it. Number 3, 10-year bond rates in Canada started falling, which directly affect the real estate market. So a quick little backstory, you can buy bonds from the government, also called treasuries. I'm not going to get into what that means because it kind of goes over people's heads, a little confusing, but basically think of buying stock directly from the government. So instead of investing in Apple, Amazon, Tesla, you can invest in the Bank of Canada, in Canada, and buy stocks essentially directly from them, and we call these bonds. So in times of economic turmoil, or when everybody's very afraid with what's going on with the economy, what's happening with the real estate market, less people want to buy bonds from the government because they think the government might go bankrupt, or they might not be able to pay their debts, or the economy might get worse. I don't want to buy a bond and it be worth even less. So less investors, and specifically institutionalized investors, stop buying bonds. So with basic supply and demand laws, the prices of the bonds must come down. The Bank of Canada essentially lowers bond rates. Now, it's not like some guy or Tiff McClem is sitting there in the office checking this every day and lowering bond rates. It kind of happens automatically. Basic supply and demand rules take over, just like a stock. But when less people buy these bonds, the cheaper they get. Now, what gets really interesting is when the 10-year, specifically the 10-year bond rate drops, this directly affects the real estate market because real estate mortgages are heavily influenced by the 10-year bond rate. So imagine this. Here's the Bank of Canada raising rates, tightening, raising rates, making it less affordable for people to buy houses because, let's be real, they want to cool the real estate market. Real estate is getting out of hand. Food, eggs, gas, shelter, whatever. It's all getting out of hand, but also real estate is one of the biggest things where prices are just running away. So the Bank of Canada is like, hey man, I'm gonna raise rates, but I really want to cool down the housing market. So the Bank of Canada is making all these hard decisions, making all the hard work by raising rates. But on the flip side, we had the 10-year bond rate going down. And it dropped about 75 basis points at the biggest moment, which is a lot. I mean, it took the Bank of Canada 2 to 3, almost 4 months to ratchet rates up 75 basis points, and it dropped like this in a matter of weeks. And funny enough, this big rate drop kind of happened the moment the Bank of Canada said, you know what, we're pretty much done raising rates. In fact, we are done raising rates. We're just gonna keep the rates where they are. We're gonna relax, we're gonna be data dependent, and then we'll make a decision, but most likely we're not gonna raise rates anymore for the rest of the year. Even now, they're kind of hinting that they might coming up in the next couple months, but it's probably bullshit. But anyway, so for real estate agents like me, well, not exactly like me because I specialize only with real estate investors, but the typical everyday realtor heard all of this and going, interest rates are dropping like 75 basis points, almost a full percent by now with the bond rates, and the Bank of Canada just said they're done raising rates. I'm gonna tell all of my buyers that now's the time to buy, dude. This is the end, this is the bottom, it's time to buy. It's really only up from here. The real estate market's only gonna get better from here, because when they start lowering those rates, which they will, oh my god, dude, the market's gonna take off, prices will increase again. So literally now, buyers, now is the time to go wild. And I'm telling you, from being in the industry, this is what every realtor was telling their buyers. It was like music to their ears. And on the flip side, they were telling their sellers who were calling in saying, hey, I'm thinking about selling my house. The realtors were saying, no, don't sell yet. The market's gonna get better in the next like couple months, very, very soon. How about we sell in the spring? How about we sell in a few more months? That's when you wanna sell. But to buy, you wanna buy now. So this leads to number 4, sellers stop selling. And what's interesting is that they stopped selling the entire time. As soon as this economic turmoil hit, as soon as interest rates went up, sellers stopped selling because that drop in real estate prices happened so friggin' fast that the sellers' memories were like, well, geez, I could have sold my house literally like 4 months ago for $800,000, and 4 months later, you're telling me my home is only worth $600,000? So many sellers who wanted to sell, not those who had to sell, but the majority are just wanting, they said, you know what, I'm just gonna wait. You know, the government, all the media is saying this inflation thing is terrible. I get it, but you know, it will go down. The government will fix inflation. I'm confident things will get better. So I'm just gonna wait to sell like a year or 2 from now, and then I'll sell when prices are back to what I could have got just 4 months ago. Why would I sell now? So you had that effect taking place the entire time rates were ratcheting it up. And
when the end was in sight, now you have realtors telling their sellers, dude, don't sell yet. Wait till the spring, wait a few more months, and then we're gonna sell. Trust me, it's gonna be crazy.
So what this created was an enormous lack of inventory, this is really what saved the housing market from going into total shambles, was that, dude, nobody was selling. Nobody was selling and wanting to take that enormous loss from what they could have got just a few months ago. So sellers really stepped up and said, dude, I ain't selling. So if you were looking to buy, there was only like 3 houses in a whole neighborhood for sale. And I can vouch for this because I was still flipping and unloading some of the properties that, unfortunately, I bought at the beginning of all of this. But still, I made it out pretty good because when I went to sell a few of these townhomes I had for sale, I was literally the only 3-bedroom, 2-bath, fully renovated townhome on this side of the entire town. So like of a population of 200,000, I was literally the only house that fit that description in that price range in the entire fucking city. So when realtors and their buyers were coming through giving me these crazy offers going, oh, you know how it is, Matt, 2008 might happen, the market's crazy, I was going, bullshit. I'm the only guy here on this side of town with a house this nice, of this criteria, currently for sale. Are you gonna pay or are you not gonna pay? Next. So sellers in the market really didn't take the shit kicking that everybody thought they were gonna take. Which leads me to number 5. Millennials aren't getting any younger. And I can vouch for this. I was born in '88, so I'm turning 35. I'm kind of right in the middle of the millennial generation. And when you're 35, you don't got any more time, okay? So everybody's saying, oh, just wait. We're done waiting. Millennials specifically have been waiting since 2020 when you know what happened. Everybody was told, sit in your basements, you can't travel, shut up, don't say this, and now you're telling us to wait a couple more years to buy again? No, we're done waiting. I'm 35, I got a family, if I wanna have kids, it's, hey, clock's ticking, it's time to have kids, I need a house and I need it now. So you had this perfect kind of generational and economic storm happening where sellers weren't selling, there was a lack of inventory, but millennials were saying, geez, I don't really wanna buy now with everything going on, but you know what? I don't have any more time. So a lot of millennials wanted to buy with limited houses on the market. What do you think happens? Supply and demand forces. Prices kept stable and bidding wars and crazy offers are still happening. Number 6, the job market is still absolutely crazy. So when you still have all of these fears of the economy potentially going for a shit because of interest rates, this is gonna make it harder for businesses. You have all these companies laying off people, which is primarily just tech companies, but the media likes to make it seem like every company is laying off, but it's absolutely not facts. The job market is still incredibly tight. Unemployment is still very, very low. So people in Canada still have great jobs. They're still making a great income. The potential of them losing their job in the next couple weeks or the immediate future really isn't there. And a lot of economists are calling this the non-recession recession. And it's really more so a recession of wealthy people. So people who own stocks, bonds, mutual funds, if they own real estate, those people are getting punched in the face with everything going on. They're seeing their wealth retract, they're seeing the values of those things go down. But for the average lower class or middle class person who maybe doesn't have that much money in the stock market or no money at all, their lifestyle really hasn't changed that much other than food costing more, obviously. But they still have a job, their wealth hasn't really moved at all. So they're kind of just living their life as normal. For the real estate market to really take a shit, it needs these high interest rates obviously to bring prices down, but it really needs people losing their jobs, going bankrupt, having to foreclose on their house, they can't afford payments, they have to sell their properties immediately. You kind of need that to all happen to have another kind of 2008 correction in the real estate market. But with most people keeping their jobs, keeping their incomes, no real threat of them losing their job anytime soon, the 2008 Armageddon scenario really isn't happening. That leads to number 7. The economic recession hasn't really happened yet, and it is coming. Now, there's a lag effect to all of these interest rate hikes, and it takes 2, 3, 4 years sometimes for these interest rate hikes to directly affect companies, the job market. So we will see some kind of an economic recession, but that doesn't necessarily mean there must be another real estate recession. And from studying economics in the real estate markets like it's my friggin' job, because it is my job and I'm a friggin' nerd, I can tell you for a fact that when we have an economic recession, it doesn't always mean there must be a real estate recession. And this is what the media and the regular Joe doesn't really understand. They think that if there's an economic recession,
it must be 2008 all over again.
Let's take a look at the 1989 Black Swan event where the stock market dropped crazy, 90% in a bunch of stocks. That was a crazy stock market and economic recession. It was a very short one, but did it affect real estate specifically? No. real estate just kept doing its thing. Nice, boring appreciation, 3, 4, 5% a year. That event had nothing to do with the real estate market, but it freaked everybody out. It was a massive economic recession, even though it was short. We had the early 90s recession. That was a good sized economic recession, and real estate took a hit a little bit in the sense that it didn't really grow or go anywhere, but it didn't really go down either. It was really more so an economic recession. Then we had the dot-com bubble, a massive stock market drop recession. What happened to real estate? Nothing. It pretty much just did its thing. Nothing happened to real estate. Let's take a look at the 2008 recession, an economic Armageddon and a specifically real estate recession, because that was a specific real estate mortgage-backed security type recession. So real estate got annihilated in the US. What did it do in Canada? Nothing. I was working during 2008. I was a carpenter. I was very focused in the market. I started investing in 2012, but I was very aware of what was going on in the real estate market in 2008. What happened in Canada specifically, Southern Ontario even more specifically during 2008? Nothing. So you see, we can have an economic recession where people are losing their jobs, unemployment goes high, it's hard to find the job you really want, etc. But it doesn't necessarily and always mean real estate must also hit the shit. So what do I think is gonna happen in the real estate market, specifically the Canadian market, and even more specifically the Southern Ontario market? Is pretty much rocket time, baby. We have too many fundamentals on the side of the bull. We have the biggest generation ever in a lifetime, the millennials, all coming of age. They're starting to start families. It's time to buy a house. They all want a house. It's time to leave mom and dad's basement. They want houses and they want it now. On the flip side, we have sellers who are saying, I ain't selling just yet. The market's gonna be rocket time. And I know that because it's all over the media and my realtors are telling me I'm gonna wait to sell just a little more. This lowers inventory. We have a crap ton of buyers. The bidding wars are back. I can tell you this honestly because now we're selling flips and we're buying flips like crazy. The flip business for us is back on full throttle. And we just sold the flip like a week ago from filming this video. I got way more than I even thought was fucking possible or acceptable. The prices are insane. Now, we fully renovate our properties. They're literally HGTV style properties. Of course, everybody likes them because they look amazing. But seriously, I got 72 showings in the first 3 days I listed this property. It sold on the 4th day before the offer day for way more than I could have even imagined. I was blown away. You guys are fucking crazy, but the market is booming again, baby. Now, obviously work with a real estate professional. Don't go too crazy. Don't be too stupid. Still try and get the best deal you can, but time is running out. Multiple offers are back. The real estate fundamentals are all there. And when the Bank of Canada finally starts actually lowering rates, which they will, probably the next 6 to 12 months at maximum, which is even their prediction, they're predicting inflation to fall rapidly over the summer and the fall here. And when they start lowering rates, which they will, because you can't keep these rates this high, oh my God, their payments are crazy. It's gonna be a fucking gong show for real estate. Anyway, guys, those are my thoughts. That's what I'm seeing in the market from being a boots on the ground realtor and investor. Let me know in the comments below what you think is gonna happen to the real estate market. Am I all full of shit? Am I too bullish? Am I an idiot? Let me know in the comments.